Welcome to my first podcast. Yeah, I'm happy to have you as my first guest because I think, crypto is not dead yet. And crypto is a unique, pretty exciting topic to talk about. I think a lot has happened over the years, and you are the perfect person to guide us through what is happening and give us the insider view inside the crypto world. So let's get started.
Yeah, thank you very much, Clinton, for having me on the show.
Yes.
Uh, let's
let's get started. Okay, so I think before we start this podcast, I think we should have um, 2 minute silence for those who took a personal loan, like with 15% interest, to invest in crypto projects and ended up investing in Bitcoin, other cryptocurrencies at the peak value. So, what do you have to say to them?
so regarding this. 2 minute silence for actually people those who took a loan and invested that in USD and Luna.
Okay.
That was where the whole bear market kind of exacerbated into something what we see today, where we saw most of the traditional companies that came into crypto went bankrupt. So USD was something that lost 99.9% of it.
What is USD?
UST.
UST. Okay.
It was a stable coin, which is an algorithmic stable coin founded by Swan.
Okay.
A Korean company.
And I think is facing lawsuits in Korea.
Lawsuits.
And I think we should have 5 minutes of silence for those who thought stable coins would be stable and pretty less risky and invested in whole savings.
So it depends actually. Like there are stable coins which are backed by a dollar.
Okay, just let it pull.
No, not USDT, which they apparently say they are backed. I do not know. We do not have enough information to say that they're not backed. But then you have BUSD, Binance US dollars, which is also which Paxos is the one that manages it, and which is somewhere very close to being backed by a dollar. But apart from that, obviously, we had USD, which was completely a stable coin, which was depending on Luna's supply and demand, and accordingly, both the prices were tried to balance. And a lot of people did take a loan to actually invest.
Yeah.
And most of it was invested in a protocol called as Anchor. And Anchor was a decentralized protocol, and a lot of people.
I think
even on Twitter there were
even in Reddit.
Exactly, on Reddit, people talking about how they lost their money, their savings that they put in. Because the way UST was, how UST and Anchor was marketed was more like a bank where people were given the hopes that this is a bank and it's a crypto bank and you can put your money here and you're going to get a 20% return on your investment. So most people felt that, the least risky thing someone can put their money on in any of the crypto assets was putting their money on Anchor protocol, which turned out like disastrous, as we know, which caused a lot of companies to go bankrupt. Voyager, we had BlockFi, we had FTX that went down. We had Three Arrows Capital, which was a $10 billion hedge fund, a crypto hedge fund that went bankrupt. So yeah, I mean, I wouldn't call it 2 minute silence, but a lot of these incidents have happened in the past in the market, and this was one of the black swan event in Web3, which no one really expected. And what came after that was a total turmoil that we saw with the FTX going down with $40 billion in valuation going to zero. People losing the deposits that they had on FTX. So it was a very sad moment in crypto. A lot of people lost hopes with. But one thing we need to take note: these were companies which were centralized, and what crypto does is decentralization.
Oh, that's interesting take actually. That brings me to the second predictable question. How was the market last week?
See, I don't really keep track of how the market works every week or what it was a day before. What we do keep note of is how the interest rates are, mostly how the FOMC interest rates are, the meetings that you usually have. Those are what we keep track of. But it's been a while now since I haven't actually personally kept track of what really happens, on day-to-day stuff with the market volume, because I've kind of shifted a little towards building Web3 companies now than being actively trading. So
I see. Right now, crypto is facing a like bear winter, like the bear market. And if you look at the funding, compare the funding flowing into crypto to the last years, it's quite low, like very low. And even with the venture capitals, they're moving away from crypto projects to fund into other new thing happening right now, which is generative AI or spatial computing and such and such. And even with that, general public who have faced a lot of losses in the bull market. They're also not enthusiastic they used to be, and they also have moved away from investing on crypto projects. So, why are you still optimistic about crypto?
right. So see, you're right with your stats actually, because funding has reduced. Like what we saw last year was around $22 billion in funding in these Web3 companies. And this year, as of now, there's only $500 million that has gone into funding.
From 22 billion to half a billion.
Half a billion. Maybe by end of this year, maybe another half a billion. That is just 1 billion that goes into Web3 compared to last year. Uh, why am I optimistic over here is because we don't see this market in terms of investing our $1 billion or $2 billion or whatever. Like we are seeing it from a perspective that what is this company going to solve? Okay, like let's say play to earn. How are they going to decentralize this gaming industry? What is the smallest way they are able to cater to that need? So we see it in that perspective, and companies like those are very much in demand. You see Web2 companies partnering up with these, like for example, Polygon, which is currently sitting at 9 or 10 billion. A lot of people use it. Starbucks or any of these companies, even Meta, they use this because the transaction speed is much faster. Like for an investor or for somebody who likes to trade crypto, it's not a chain which you would like to go and trade. But for user experience, it is very much adopted by these companies. So when you look at all these day-to-day stuff that is happening in crypto, we see what could have looked like in 2018, like almost a similar. You know these companies are working, they have the funding, they have the burn rate to go for the next 2 years. And when we see a new market, a positive sentiment in the market, there is going to be a run that we are going to see in crypto. This is very similar to what all the runs that we've seen. Like it follows a historical pattern of data, and which is very similar. And we kind of knew it, like 2021 December, where the bear market would start. And even now, like we had almost a right prediction that June would be a time where we might see a dip in the market, and it was kind of a bit unpredictable over the last few days when BlackRock and all of these companies started filing for ETFs. Um, but what keeps us optimistic is basically the fact that there are even big companies getting into this, like big hedge funds like BlackRock getting into this market and making some statements like the real world assets are going to be an industry worth $20 trillion and it's going to be a tokenized industry. That is what gives us the optimism that there is a bigger hope here rather than the small utilities, because it's not just these things are very it helps you in the short term mission and goals that a company has. But when you look at a bigger perspective, and obviously, if someone like BlackRock is going to make statements like that, they have enough research and data to back it. So that's the reason why we are optimistic even over the longer time horizon than over the next 10 years.
I'm going to stop you right there. I see crypto people use a lot of jargons and a lot of other words that we don't understand. I would say they have created their own vocabulary. I may stop you in between where I wouldn't, if I wouldn't get what you said, maybe one word or something like that. I think I just caught one word where you said ETF, BlackRock investing into ETF. I couldn't get what ETF stands for. What is ETF?
ETF is an exchange traded fund. So basically what is happening is BlackRock exchange traded funds.
Okay.
What BlackRock wants to do is get Bitcoin to their huge investor base.
Okay.
And right now, none of these investors can trade Bitcoin. They cannot buy and sell Bitcoin to any of, between any of the client base that they have. But by getting this ETF, by getting the recognition, if the SEC gives them the recognition for it, they are able to, put this ETF into their whole portfolio, and anyone can trade it. Their investor base can start trading it, which is a massive bullish news for crypto, because if you look at it, there's going to be huge volume coming in, not only in terms of the users or the investors, but also the market making aspect of it, where we would see a huge volume coming into Bitcoin and other crypto assets in the future.
Now let's get back to your journey, how you started the crypto. So back in time, I would say we'll get back to higher education. So what did you study, and what did you aspire to be back then? I'm sure it wasn't crypto, and because crypto came out of the blue. So yeah, what did you study and what did you aspire to be back then?
Right. So I did my bachelor's in pharmacy, and while I was doing my bachelor's in pharmacy, my goal was to get into research, or discover some drugs. It's everybody's goal. It's like a thing which everyone has. Like, I should innovate a drug and save, be one of those top scientists in the world. But obviously, I was open to anything, not just pharma, or specifically in pharma. So after my bachelor's, I went into masters in pharmaceutical administration. So it was a complete switch, actually. What we saw as a core biology that was happening, and then I moved into more of a business perspective in pharma. It's mainly because I felt that the most of the decision making comes from these business people, rather than the innovators or the scientists that actually discover the drugs or manufacture or any kind of formulations, or your operations that happen. So I wanted to be one of those decision makers, to be able to direct whether this thing, this particular innovation could save lives or not. And admin was one of that field which actually gave some kind of optimistic, hope that this is something that could help.
Pharmaceutical administration.
And obviously things had different plan. I went into immediately. I was interning at Novartis, actually, for almost a year. And after that, I got a job offer at the same company that I was interning. So I joined in 2020 August is when I joined as a full-time role and I was working as a business analyst. So business analyst was almost the same. We had to figure out what the business problem is, who are the competitors in the market, what is the data of this pharma company, how can we make our data better, and research what business practices are they using, what is their forecasting, how can we forecast our data. And these were a couple of things that went into it. And while I was interning, we were looking at social media aspects of it. It was called as social media listening.
How does Novartis use social media?
So basically what we do is, there are two ways. There are two departments that we had. One was a department which is continuously monitoring social media for anyone that mentions Novartis, especially on Twitter, mentions anywhere on public forums.
So as a public sentiment.
Exactly. So this is specifically done because to avoid any kind of adverse reaction reports that come. Sometimes people don't really go to the doctor. They might see an adverse reaction which was totally unexpected, and they straight away go to Twitter and mention it. And we have like a continuous monitoring to see whether patients are mentioning any of these sentiments on social media. And the other aspect was something what we were doing, which was more of a report and deliverable based, wherein we would analyze a particular therapy area, like let's say for example hemophilia. So we would try to understand what hemophilia is, what is the diagnosis, what is the treatment pathway. All of this was put into a presentation to understand what the disease and what the treatment is and who are the competitors in this market. And then we would go to social media and analyze roughly around 1,000 data points, basically 1,000 set of data, tweets, or public forum posts that we would just pick from there, and then analyze it and figure out what are these patients talking about, what are these physicians talking about, and then try to make sense of the data. So this is something, mostly analytical field, and it's kind of the field which I was always interested about, analyzing any kind of aspect, whether it could be a market, whether it could be a business, whether it could be anything, like even with your personal, the environment that we have around us. And that's kind of where, all of this started. And then crypto just happened like in 2021.
So I see things were going good at Novartis. Now let's put the spotlight onto that little moment that introduced you to the world of crypto. I would say that that is responsible for changing your entire career path from there. So take us back to that moment that introduced you to the world of crypto.
Right. So, like you mentioned, everything was going good at Novartis, in fact. What changed was in the month of Jan 2021. So we saw a very huge retail inflow and market with the short squeeze that was happening.
I'm gonna stop you right there. Retail inflow. What do you mean by retail inflow?
Basically, investors who are retail investors. These are not institutional investors.
Okay.
These are ones with, they have
people just like you and me.
Okay. They have day-to-day job going on with them, and they look at the market and they see that, okay, I can make some money here, or this might look like a good investment, and they just put their money into it.
Okay.
This is what a retail investment investor.
So inflow is amount of money from the retail investors.
So basically, what happened was, we saw a short squeeze that was happening in GME. GME was a meme stock, a company which was actually dying, and we had a lot of hedge funds which had shorted the stock. Then we also had AMC, which was also another stock which was shorted massively by these hedge funds.
Yes.
And investors, retail investors, took note of it. They started creating threads on Reddit, and
this was Occupy the Wall Street moment, right?
Yes.
Okay.
Kind of, I don't know what the moment was called, but it was named as the short squeeze.
Short squeeze. Okay, that is. It was the first in history in finance where people observed short squeeze in real life.
It's where a group of retail investors. Short squeeze happens all the time.
Okay.
But this was it was a black swan event, basically, like where retailers came together and started putting their small money into it and started pumping the stock and liquidating these hedge funds. And these hedge funds did take a big hit. I think it was Melvin Capital or one of these VC hedge funds which were heavily in a short position on these companies, and they were liquidated by close to $1 billion, like 2 billion or almost. And they thought that, let's see how far would these retail investors go, and they took a loan from another hedge fund trying to cover their short positions. And it was insane. Like, just to give you details about that, it was a very emotional moment, I can say, because it was these retail investors trying to stick it to the rich people. And I think that is where
kind of inspired you.
Excited about this market, because the market was no more about VCs or people with money coming in. It was people with even small money getting into it. And it was absolutely insane. People were just throwing money into it, knowing that they could lose it very well. But it was joyous for them to see that a hedge fund was going down. And that actually got me into crypto. And when Robinhood stopped trading, there was no other option for retail investors to put their money into. And the only available option was to get into crypto. So it had already reached a peak, and that is when I was following the news very closely with anything that was happening around. I was actively looking for opportunities in terms of entrepreneurship, and I saw that people mentioned that Doge could be the next token or coin or whatever. It could be the next asset that could see volume coming in. I think I saw it in the afternoon, and right there, luckily I had my QuizX account open with me, and I just put whatever savings that I had over the last 4-5 months that I worked. I straight away put it into crypto, and what happened? It did like 300% or 400% over the next 24 hours, and that was the first. Elon Musk even tweeted that evening.
Okay. So I see all the collective events had a collective impact
exactly
on your V1 crypto. So my question would be, what gave you the conviction to quit your job and to get into unregulated, uh, highly risky, speculative crypto market. So, what gave you the conviction to quit your job and lose your money here? I mean, you would probably have lost your money here.
Right.
So, what gave you the conviction? Is my next
See,
question.
there are a couple of things actually. One is obviously, see, when you get into crypto, you could either go with small money and know that what you're sure about what you know what you're doing. For me, it's always been about risk taking. And I did not have anyone who was dependent on me. I just finished my master's. I had a job which was paying me well. To me, it wasn't really a risk putting all my savings because I knew it. Like I might lose that money, but I still have my job here. That is one of the security aspect of things, and there's also another aspect which is more like uh, this could be the next revolution, and I've always been searching what could be the next revolution, uh, and I felt truly that this is what I've been waiting for, and not there was enough data backing it actually because when I was working as a social media analyst, uh, most of the time you see negative sentiments toward pharma companies. Like you have a lot of people saying that we create the disease first and then
spread the wax. Yes.
phrases which people use a lot all the time. But here I was in crypto, and the sentiments were quite the opposite. Like we could literally see people screaming a very common word in crypto they call as diamond hands, which means
What's diamond hand?
hands.
Okay, tell me about
Like what they mean by that is I'm going to invest in this and I'm going to hold it no matter what. Like my hands are diamond.
diamond.
They
Okay.
have something called as paper hands. These are the ones who are afraid of their investment, and the moment the price drops, they sell it instantly. Diamond hands are the ones they just don't sell it. They're just YOLOing into it, and they're just waiting. Let it go to the moon or let it go to dust. So this is what was happening with crypto. People were like so into it. Like if they believed that this company was doing something in decentralization, they would just throw their money into it, and they know it. They might lose their money, but they were just doing it. Like even if it's $100, even if it is $50, they would just throw their money into it. And that is what got me into crypto, because I knew it, like this is something more of a socio-economic revolution rather than just a financial revolution. Because if there's a group of people wanting something, it is not just a demand that is it's not like a company trying to sell something. It is more like people want it. They are like it inspires them, it empowers them, and that is when I felt that this is going to stay here and it could be the next big thing. So that is roughly around month of April or May, somewhere around between this time. March is when I lost all my money in Doge, and I started trying to figure out what might be the trend here. And a lot of things. I mean, March is when a breakthrough happened. Like I knew that okay, this is what crypto is all about, and the long-term aspects of it. And then in June is when I actually submitted my resignation, and I was very optimistic that where this thing is going, and I was pretty confident that I knew this thing is here to stay. It all depends on how I analyze it and what I make of it in this market. So
Okay. So how exactly did you gain knowledge? Like you're moving into something quite different, which you have never done it before. So you need to. I think it's really important to gain the knowledge necessary to do that. So how did you went about? What was your learning curve?
right. So basically, what happened here was. Um, it straight away started with me buying the first DeFi token. It was
DeFi token.
DeFi.
What is DeFi?
Decentralized finance token. So what normally happens is you buy on exchanges, like centralized exchanges, and then we had something called as decentralized exchanges, where you had Uniswap, PancakeSwap, where you could go and buy the token without requirement of any central authority. You could just have your.
Who are the central authorities here?
When I say central authority, it means Binance or KuCoin or central exchanges, wherein you have to deposit your funds into the wallet and then you have to start
Mhm.
of it. But in this, it was completely different. You had something called as an automated market maker. These things came much later, but it was more about me trying to figure out what is going to give me the next 100% return.
Okay, straight away started with the investor mentality.
Investor mindset itself. Like, what is it that is going to give me the next 100%? And there is a reason why, because while I was trading on Binance, I lost money as a trader, man, because I didn't know much of technicals. There was one project called as Alice. Alice did roughly around 600x or whatever, 600x or something.
What did Alice do?
So Alice was a gaming play to earn project which had their own token called as Alice. I do not know exactly how many X it did, but it went to a huge market cap at launch. People made insane amount of money on it. And what got me curious was who are these early investors in this, in these kind of companies? Like what made them different from us buying at launch at much higher valuations, which were roughly around 100x more than what they bought it at. So that is where I got curious about how these things work in investment. What is it that I would have to do to reach that point? Obviously, like back then, it was like I didn't have a clear cut plan as to this is what I'm going to be. Like I'm going to be a VC or any of it. I wasn't very sure that whether my journey as an investment would be what it is. It was the first investment in DeFi itself. It was a meme coin that I invested my money in.
What was your main coin?
It was called as 100x coin. So
100x coin.
Yeah, it was actually by a crypto influencer called Ken the Crypto, and that is the first token, which was a breakthrough token for me, because that is what got me completely into this whole ecosystem of DeFi. And this was in the month of March, and that is where my entire conviction of how the market and how the crypto market would work in the future came from. Because that was one token where I invested my money. I lost roughly around 70% within the next 24 hours. But I just held it. Like I was that diamond hand, what I was talking about.
So 100x coin was your first diamond hand investment.
Yeah, diamond hand investment. And that did roughly around, I think, 40x after I invested in it. Within the next 1 month, it did 40x on my investment.
So that gave you the first profit.
Yes, that gave me like the first profit after my Doge investment that I did. This was like 2 months.
What was the timeline? What was the time period?
When I
Feb 2021.
Yeah, 2021, and then this was somewhere around April, beginning of April or mid of April, somewhere. I do not have the right timeline in mind, but it was around the month of April that where I took an exit from 100x coin, and I was very, very active in their chat, the updates that were happening, and trying to get an understanding of what the market is, how do these degens invest, and what is all this. It was very new.
I'm gonna stop you right there. Degen. What do you mean? What do you mean by degen?
Degenerative. So basically, these investors are someone with a very high risk appetite compared to your regular investors.
So you call them degen?
Yeah, we call them
high risk appetite investors, degen
investors. And this is where, which actually got me started. Like these were the events that happened, which got me into all the other projects that came along in DeFi. There was many tokens, many meme tokens that came. There was something called a Safe Meme, which came in after the Safe Moon hype. Safe Moon did around started at, I think, $50,000 market cap or $100,000 market cap, went to 7.5 billion in all-time high. There was another token called SYA. There was a project called as Project Quantum. A couple of these tokens actually did well, and which got me the first investment to progress from there and know that this is something that I can do as this is something I can make it a full-time thing.
Okay. So didn't you face any bankruptcies during this period? Didn't you lose all of your money? Because in crypto, there are like high probable chances that people lose all of their money they put in crypto. Didn't you face any of it?
Right. Actually, in fact, I have gone to zero twice, not just
twice. What investment got you to the zero?
So there was one investment where so what really happened here was my funds were stuck in an exchange, which was a very new exchange. Back then I didn't know it. It was all about learning and trying to figure out things. Small exchanges basically have a liquidity issue with them, so they don't let you withdraw the funds instantly, and they don't let you deposit your tokens instantly. So The way it works is when a token gets listed on a centralized exchange, in these small centralized exchanges, they avoid public coming and depositing the tokens because there's a huge buy pressure that comes from their existing user base. And this buy pressure is specifically, it's more about their users, the centralized exchange users, and it's a small user base. It's not a big user base, so they do not want people, depositing the tokens from their cold wallets or their hot wallets straight away into their centralized exchanges and dumping it on their investors. So this is where, my funds were stuck over there. I didn't know about it. I thought, okay, centralized exchange had a price difference of, there was a huge price difference, in fact.
The like small central
To the decentralized exchange.
Okay.
There was 100% or whatever difference. Like literally, if I sold my tokens on that centralized exchange, I would have made more money than selling it here. So that got me to go to that centralized exchange and sell my tokens. But unfortunately, my tokens were frozen there, and this was all the money that I had. I went all in into that one single project, 100x coin. There was only a few funds left, and this fund was specifically kept to invest into a project which I was very bullish about. I knew this project is going to launch in the next 1 week, and their private sale is going to happen like in the next 2 days, and I have to put my money into it. I didn't have money to put into that project. Obviously, back then it was so risky that I couldn't ask anyone for a loan and put money into it. I had to put my own capital, and I couldn't do that. And that token did 70x at launch, straight away at launch. So if I had invested a week ago, a dollar invested would be $70 within a span of 1 week.
Okay.
And that is an opportunity that I missed. And the reason why I missed that opportunity was on that day when I had to invest. I invested in a token which I thought, okay, let me put my money here and make a 3x so that I can put 3 times more investment on this particular token and make a good return on it. And I was very confident about this company, but I wasn't very sure about the one which was here, and that turned out to be a scam and a rug. And I lost my money there. That is where I missed that opportunity to put my money into that token.
Okay. This is a big topic in crypto, and most of the people who are hesitant to invest in crypto is because it is filled with scams, like so many scams out there. Can you help us list some of the scams in crypto, and also help us find ways to avoid scam?
So yeah, we can spot scams. So there were a lot of scams when we initially started. You had to expect that a token can scam you. It wasn't like whether the token will scam. It is you had to first predict that you are going to lose your money here. If you're lucky, you're not going to lose your money. So this is how it actually worked back then.
Okay, that was the mindset.
That was the mindset you had to have when you're investing into it. And scams were like very, very different back then. You had something called as launch pads, where crowdfunding used to happen, where these meme coins or any of these utilities would just go on that platform, list their tokens, and we would fund those, and at launch it would go up by 10x or whatever, and we would sell it. Most of these would have a token exploit in the token itself, in the token contract. So when it lists, they can remove the liquidity out from there, or they can increase the buy and sell tax, or they can stop trading itself, so that your tokens are valued. There's no more value in those tokens anymore. You can't sell it. You can't get anything out of those tokens. So it was very, very weird, because most of these, to even create a token contract, you need to have some experience on Solidity, and there were very few who knew Solidity. So
what is Solidity?
Solidity is basically the code, the smart contracts, what you call it, to be able to deploy these token contracts or any of these smart contracts on the blockchain. You need to know Solidity. So it's a language basically. And there were initially, you had scams which were so common, like people would just come up with the website, put some mission and vision, and it was as simple as that, and they would just walk away with the $5,000, $10,000 straight away from those scams. And then
so people fall trap for the mission and vision statements.
Exactly. And it's not just mission and vision statements. We had something called as charity tokens, which was a major hype. So
charity tokens.
Yeah, so basically, what the goal of these charity tokens were, like people were buying it, and a certain fee used to go into a treasury, and that fee will be used to do charity. And it was a major hype back then. And these charity tokens, one of that was a token called as forestry.
Okay.
So this was a token that I put my money in. It. The developer was like completely public, and back then it was like developers weren't public, founders weren't public,
Anonymous.
all anonymous, and this was one of the projects where the founder was public, and
You thought, okay, he's facing the crowd.
and all of it, and it did massive returns. Actually, I put very small money into it, and it did really well post launch. But I don't know why suddenly he decided that he's going to pull the plug, and he just removed the entire liquidity and stopped the trading. So that was the first experience where I felt you cannot trust anything here. Like you cannot trust anything.
I think that is called exit scams, right? Where people come up with the vision, mission statement on the website, and also may do a small product and showcase, and people see, oh, they have a website or they have a working product, and they put the money and as you said, they pull the plug. The developers or any business team from that team, and they pull the plug, take all the liquidity, and just shut down the platform. So this is the one of the I think second biggest scam in the crypto industry.
Right. Basically, it's also there are a couple of factors for it. Okay, what happened back then was like complete scam. It was like you could still run the project, you could still push the project. There wasn't enough efforts put to a point that you decide, okay, this thing is not going to work. It could work. They just saw that, okay, at this point I'm just going to plug it
because they already got their reward from the
so already pre-decided that if this is what the target that they set, and they were able to get so much into the liquidity pool, we're just going to pull the plug. And that is where and there were rugs were very rampant. We call it as rugs. Basically,
what is rugs?
Rugs is basically a term wherein the liquidity is removed from these token pairs. The way these tokens work is it's called as an automated market maker. On centralized exchanges, you're basically kind of trading, with a buyer and a seller. But when it comes to your decentralized, there's no buyer and seller. There's a liquidity pool that is created, wherein there is a supply of tokens and your fiat, whatever, dollars, like basically dollars. So this moves around, if you sell more of your tokens, the token increases, and then the dollars are given to this person. So the supply dollars decrease. That means your this supply has increased, so the price of the token reduces. It's a automated market maker basically. And there's also a ratio that needs to go. It's basically a mathematical formula which calculates the price of the asset based on demand and supply of the two assets. So this is how trading used to happen. It wasn't like buyer and a seller meeting and matching the prices. It was basically whatever is the market price, and when you sell it, if the liquidity isn't good enough, it used to cause a price impact in the chart. So these were very new problems and all that we would see, and developers or founders would just feel like if they have like $200,000 in liquidity, they would feel like, oh, this is good enough for me, and they would just remove the liquidity from there. And once that liquidity is removed, nobody can trade that asset. There's nothing to trade that asset with. Whatever tokens they have is just worthless.
Yes. And is there a way to spot scams?
Yes, now there are a lot of ways. Even back then, there were no such tools to analyze these smart contracts. We had our own group of friends, who are developers and people who used to analyze these projects. So we were all in a single group. And we would analyze these token smart contracts. And if we saw something like a mint function, wherein a developer can mint more tokens than what he initially had said in the supply, or if there is a function where he can blacklist the wallets. Basically, blacklist is something like he will prevent these investors from buying and selling it. So he can blacklist everyone in the holders list. That was one way where we would see those functions in the token contract. Then there was something called as sell tax, buy and sell tax. So if the sell tax is set to 99%, if your tokens are worth, let's say, $1,000, selling that would make it like completely worthless.
Yes, so that prevents the developers us from pulling the plug.
No, it prevents us from selling and trading that asset. Those were the ways.
But how can it prevent the scams happening?
It wasn't preventing scams. These were the things that we were looking for.
Okay.
Points like whether the developer can increase the sell tax to 99%. If he can increase it, we would avoid that particular investment, because we maybe he wouldn't increase it to 99%, but we do not want to risk it. Okay, we would rather put it somewhere else where the risk is much lower and the reward is much higher. So these were, a couple of things we would look in a smart contract, whether the liquidity is locked. That is, once you create liquidity, you can go and lock it on a platform, so that it's for a duration, 3 months, 6 months, 1 year. You can lock it, and only after that time period you can unlock that liquidity. So we can be very sure that the developer is not going to run away with that liquidity. Like, there's no way he can run away with that liquidity. It is locked for 1 year. He cannot break that lock. And another thing was these cell taxes and all this. We would see the function, whether he can increase it or not. And another safest way was if the token contract is renounced. Basically, once he deploys
token contract
renounced. Basically, what it means is once he's deployed a contract on the blockchain, he can make changes, whatever he wants. But once he renounces the contract, the ownership goes to a dead wallet. Now he can't make any changes in that contract. The token becomes unruggable. You can't scam any of the investors who buy and sell your token. So these were, like things which slowly started shifting, adopting. You had liquidity lockers, which came all much later. There was no such concept as liquidity.
Now, what is your lens at looking at scams? Like the present thing.
Scams have reduced a lot, Scams have reduced a lot, because a lot of regulations and all that, people are not able to liquidate their assets. You can file a case, you can go to Binance.
To whom? Like, you can the exchanges,
because they have to go somewhere to liquidate those assets.
Yes.
So now these kind of things are in place where you can go and complain to Binance that this was a scammed project and the funds are moved to this exchange. So all these things have come into place, but more than that, people are not taking the risk right now to scam investors. There's not enough liquidity, first of all, in the market. So the scams are very rarely happening where people are just pulling out liquidity from the market. It's not that easy as it was back then. But maybe when we see new liquidity coming into the market, we will start seeing these scams again, because people don't care when there is enough liquidity, and when people are when there is a bullish sentiment in the market, where they know that, okay, if I put $100 here, I can make 10x on that, or if I put $10,000 here, I can make 3x or 4x on it. So when they know that they can make returns on it, they are willing to take that risk of putting $5,000 or $10,000 or whatever into a crypto asset, which is not happening right now. People, because they know that there is not enough buyers out there who would buy it from you.
Okay, so is the crypto community, or all the algorithms, or blockchains, are they prepared to prevent scams for the next bullish run?
Actually, yes, to a huge extent, because right now we have automated tools where you can check the smart contract. You can decide whether there are any flaws in the token contract. You can see what the buy and sell tax is. You can stay updated with what the token changes are made. Back then, there was no such automated tools. Now you have these automated tools where you can analyze these token contracts. You have something called as KYC now. There are companies which allow founders to KYC with these.
What is KYC?
Know your customer base.
Okay.
So you can, KYC with these companies, because if you do not want to be public, maybe you have a job or maybe you have your personal things going on, you could, KYC with these audit companies, and you can launch a token. And in case you rug it, these audit companies will make you public. So these are the things that which are happening these days, like new kind of ways to avoid these scams, like KYC. You have something called as safe contracts, which are very, very simple contracts. You don't have any of those functions which you can increase sell tax, decrease, increase the gas fee, or any of these. You can't pause trading. You can't blacklist wallets. All these things are like simple contracts.
Now let's talk about Herd Ventures. What is your journey to start the Herd Ventures? Is there anything with the name Herd Ventures?
Yes. So Herd Ventures was initially called as Herd Marketing, and what the firm basically.
When did you guys start it?
It was started in the month of August 2021, before we founded Herd Ventures. So Herd Marketing was the concept and the idea that we are going to FOMO people into the market. So herd means herd behavior, and what we wanted to do was make it relatable to what we were doing. So basically, what our job was as a marketer was to create enough hype for a project by getting it trending on Twitter, by sharing it in different private groups, public groups, and sharing it with KOLs. So our job was basically to market it and bring it out to the masses and create that mass FOMO in the market. And that is where the name came herd, because we were looking at the herd behavior of people. If we saw that a chart is going green, it means that there were more people going to FOMO on that chart. And that's where the name herd behavior uh, translated into this herd marketing. And Herd Ventures was started like 2 months later, when we felt that, okay, now we've ran out of options to invest into these low cap market cap projects. We had to figure out something new. So most of these companies, these projects that were coming out from the traditional space to the new space, most of them were more focused towards getting investors who are more traditional, I would say, and they wouldn't accept money from just investors who would just come and give them money. So that is what the core issue was, and that's the reason why we shifted to herd. The concept of herd ventures, because we ran out of options to put our money into projects. We had to look at, because big guys started coming in into the market, and even the founders were looking at investments from companies, from VCs, and rather than from these private investors or crowdfunding. So we had to pivot, and to stay relevant with the market, we founded Herd Ventures, and the whole idea here was that uh, we get into these investments early, and that was like it wasn't planned. We didn't know that we are going to be a VC one day. But we did want to be early into these kind of investments. We didn't never thought that this is how we need to create and this is what we need to do. It happened first, and then we branded it in that way. So that's how Herd Ventures came into existence.
Okay. So you guys basically help small companies or bunch of guys with different crypto projects they have to launch in the public market
Exactly.
and raise money in the ICO process.
Right. IDO.
IDO. What is IDO?
So IDO is the same as ICO. ICO is initial coin offering. IDO is initial DEX offering. So DEX is a decentralized exchange offering. That is an initial coin offering, which happens more on the centralized exchanges.
Okay.
And this happens more on a
Decentralized networks. Okay, interesting. The advent of internet and through social medias, it was quite impactful to run a company, run or even start a company or venture like yours, which is purely collaborative in nature. That too, I think you need to collaborate with people who are sitting other part of the world and without even meeting them in real life. So how did the collaboration take place?
So see, most of my early team members, I worked with them for months when the whole journey began. So we had something in common. We did not like founders who would scam investors. This was a very common point that all of us had. So that is what got us together, and it was those top people that I specifically pitched them, and I said, "This is what the next trend is, and we have to be one of these. We have to, we can't be staying in the anonymous world. We can't be these kind of people anymore. We have to put ourselves out there. We need branding, and we need to form a brand which founders are going to recognize, and they're going to come to us for investment. Because what's the point of having all this, and you don't find the right investments?" So most of my early team members were completely global, and in fact, for the first 1 month of founding Herd Ventures, I didn't even know what the actual names of these initial team members were. It was only after a month that we got on a Zoom meet, and we all introduced ourselves and what is it that we do in our personal life, and we shared our ID cards. Until then, we didn't even know who they were. So it was all completely global, but I didn't know where they were from. Like, one of them was from Switzerland, one was from UK, there was one from Pakistan, there was one from Nigeria. The Nigerian guys whom I started Herd marketing with, and now even Risachi, we are like working together on Risachi too. So it was all about people with the same passion. with the same principles that you had, irrespective of where they were, and we didn't even know who the gender of a person actually. In fact,
Okay, it was that anonymous.
that anonymous back then.
Amazing.
So it was much later, and in fact, I publicly got into all of these events and all of this like just a year ago in the month of December, in the month of November 2022. So it was almost a year since I did not get into the public space when we were in these kind of investments.
So tell us about your role in Herd Ventures.
So yeah, what we do at Herd Ventures is we invest into early stage companies. So I basically manage the partnerships and the business development, and where the investment needs to go. Should we invest in this company or not? If we do not invest, is it a potential company that we could probably incubate and look for potential co-investors with us? So these are basically the main decision making that goes into it, like whether a particular company is worth investing, and whether the returns that we are going to expect over a time horizon of maybe 2 years, 3 years, whatever it is it going to be worth putting our money into those kind of companies? So these are, the decision making that goes into these process. That's is basically what I do.
Okay.
At Herd Ventures.
Since you guys, take up the project from interesting projects, then launch it into the blockchain network, maybe through IDO, then raise money. So my question is, what do you guys see in the project before you guys put your money, and what's your lens in seeing things like which startup or which project in crypto would be profitable?
Mm-hmm. So see, initially when we started, our thesis was completely different. Our thesis has changed multiple times over the years. Back then, we were more focused towards what the trends were, and mostly metaverse, play to earn. These were the major trends that were happening, and we were very actively looking for companies and projects that were specifically doing something in that space. Um, Over the time, we have changed our thesis. What we've realized is, rather than investing in these trends and projects, obviously it's a much broader aspect. We need to look at trends, but what is more important is the founder. Obviously, we would look at the founder when we were investing in companies. What was his previous project, or does he have the potential to run it? But I think in a bull market, we kind of miss out on key aspects, because if there isn't much there's not much due diligence that goes, because we know that if these things meet, it's more likely we are going to get a return on our investment. But then came the bear market. That is where the investments that we made at a much higher valuation were devalued, and we lost a lot of it. Currently, our thesis is more towards what we call it like mission driven founders. So what we see here is whether the founder has a capability to be resilient and agile. Let's say he founded a company today, that idea doesn't work. What we would want to see is that founder immediately being able to switch to an idea and trying to build something around it. So irrespective of what you're building, we do understand, you have a vision for this company, you want to grow it, all of it. But when our basic whole investment thesis is towards Web3 founders who are at a very early stage. And at early stage, you can switch your mission, you can switch your vision, your product, any of it. You could just do it because you don't have a user base. You don't have a big team. There's not much funding that has come into you. You can change things. You can make amends, and you can meld the company the way that you want it in the early stage. So what we are looking at is founders who have that capability, that what trends are, and what kind of trends could be in the future, and how you would be able to switch your product, or even just switch your complete company to pivot it to a whole new product. So these are the kind of founders that we are basically investing these days.
Is the metaverse dead?
At the moment, I would say that the activity around metaverse is very low. Okay. Very low compared to what it was. Companies like Decentra and Decentraland, which is called Mana, they are valued at a very huge valuation, and there is not much happening in the metaverse. Right?
Okay.
aren't visitors at all who are going into the metaverse. First of all, the current metaverse is very plain and very boring. Like if you try to do it with your existing regular PC or your laptop, there's a lot of lag in that metaverse when you're navigating in the metaverse. You need a little higher GPU and higher CPU power. So I think it is we are at a very early stage in the metaverse. So we did see a decrease in activity when the bear market started. The metaverse was a whole concept built around Web3, and we saw that when the volume was lost, people just lost interest because it was the incentive that used to come by buying the token that drove people to go into the metaverse and start exploring what's around it. Maybe in the next couple of years, when we have better VR and these augmented reality experiences, because even with your VR, most people cannot wear the VR headset for more than an hour. You start getting a headache. So these kind of issues, which I think is going to take a little longer for something like this to actually be a mainstream thing.
Why do you think, what is the need of metaverse in this world?
So see, the whole concept of metaverse is Web3. Okay, most companies who that came into the space, Meta, they failed to understand that the idea of metaverse is being free. You being able to go around, you being able to buy the assets that you want, you being able to talk to people that you want in the virtual world, being able to play games or experience reality in the anonymous world. So what I see over here is a whole alternative reality where you are free to do things which you cannot do in the real world, experience things which you cannot do in the real world. So that's where I feel, because a lot of things, most of them, if you see today, we are like more confined towards, and especially after the COVID and the pandemic that we saw, more people have been very confined towards space that they, where they work from home. Most of it is like completely, what's the term, dude? Remote. Most of it has been remote these days. And if you see a metaverse as somewhere which fits that concept, like even if you talk about being able to work from home, you could be just sitting in a metaverse office and be working from that office. You could have a completely metaverse building, wherein all of them are within that building, and you could just navigate and just meet somebody or someone who is in another office, just interact with them. You could do these kind of experiences. Like it's real. You could be real in that metaverse, and you don't have to step out of where you are. You could be comfortable with where you're sitting.
What was your favorite metaverse?
See, I've only personally I've tried out Decentraland.
Okay.
There aren't any metaverses right now which are actually like very functional. Most of it is like bits by bit. You don't have a complete metaverse experience, not like how you see it in Ready Player One. You don't have such experiences at the moment.
Don't you think with the advent of generative AI is going to change?
A lot of it is going to change, especially with this GPU power now. People are figuring out how to share GPU power via blockchain.
Oh, interesting.
So a lot of these things are happening, and I think all of these things add up to building a experience which is going to be so seamless and which could actually take metaverse to mainstream. But it's a very long process, very very long process. It could take multiple years to be where metaverse is looking to be.
Tell me exactly how you guys, through Herd Ventures, operate in the bear market. How you guys manage to are you guys making any money in the bear market? And if yes, how you guys make?
So see, we have a couple of revenue streams that we have at the moment, because from an investment perspective, what we realized that most of these founders in the bull market, they came to us with a white paper, and the vision and mission was enough for us to invest in them. Now that's not going to cut it. What we want to invest is founders who have the capability to develop the product, not just develop the product, but also know whether there's a product market fit for that product. And what we've been able to figure out is to test out these products in this market. And the whole idea here was that, if we make an investment into a company, we want to be 100% sure that this product could at least work in a bull market. So this was the idea that we had, that our risk, that our systemic risk that we have when we invest in these companies is going to be reduced to a huge extent compared to what it was 2 years ago. We didn't just want to invest in a founder who can build a product. We want to invest in a founder whose product can actually solve something in a market. And we want to see this data. And that's exactly what we were doing. And very, very few, like out of, we did test out like 4 or 5 companies over the last 6, 7 months. And only one of the company did meet the cutoff data points, and we are looking to invest in these companies. And now with this whole concept, what we've realized is, if we are able to do this testing for a product, we are also looking at a whole new market now, where VCs invested millions of dollars in these founders who couldn't even develop a product. Forget about having a product market fit. You couldn't even develop the product that you promised. And a lot changed. A lot of it changed during the market with the NFTs, and we saw the Metaverse hype and all of these things that came in. Somebody with a better advancement, like Blur. Blur was one project which took a huge market share from OpenSea with the way it worked, with their incentives and rewards and all of it. Yeah, what was the question? I kind of missed it.
How do you guys operate in the bear market?
So yeah, this is basically, this is what we do. We are reserving our capital to invest into founders who founders obviously who are mission driven, and second, we know that the product has a product market fit or not. So the way we work now.
Do you think there will be a bull market in crypto?
See, it would be very speculative to say it, but if you go based on historical data, there's been a pattern. There's always been a pattern how a bull market starts. It's usually after a Bitcoin halving that you see the markets that starts gaining traction, and then you have like a full-blown bull market that happens like a couple of months after the Bitcoin halving. So it would be speculative to say that this is how it is going to be, but what we've seen from the past data is it's consistently been like this. It's been this way. It has followed historical data and historical patterns. And if I have to be bullish on anything, I do feel that if there is a bull market, it's going to be after the Bitcoin halving. Bitcoin halving is going to happen next year, beginning of next year, the second quarter or somewhere on the first.
So what's Bitcoin halving?
So basically, what Bitcoin halving is your block rewards. That is, the rewards that you get for being able to solve the block, to validate it, it gets halved. So that happens every 4 years. Yes, every 4 years is what the Bitcoin halving happens. And as and when more years go by, the supply keeps on reducing, and your Bitcoin becomes very deflationary. There's a set supply, first of all, plus it becomes deflationary. It takes more energy to be able to mine these Bitcoins. To it reaches a point where, mining it is going to be so expensive than the cost of Bitcoin itself. And that in fact happened last year. Mining the Bitcoin was more expensive than the cost of Bitcoin. So it just makes it not so, it doesn't make much sense for any of these mining companies to actually mine Bitcoin after that. So a lot of these companies went bankrupt over the last 1 year when the market crashed.
Walk us through some of the interesting concepts or crypto projects that you guys have funded through Herd Ventures. You need not name it, but you could tell us a rough abstract idea.
Right. So, see, our portfolio is already visible on our website, the kind of companies we funded. Many of them are Metaverse companies, play to earn. There are two infrastructure, what I mean is layer 1 blockchains, which are trying to solve scalability and increase the transaction speed, which is the same as how Ethereum is, but at a much higher transaction speed. And we've invested in a couple of DeFi, decentralized finance projects also. So this is the portfolio of Herd Ventures. Apart from that, what we are right now focusing is testing out new concepts. So a few of the concepts, just to give you an example, one was DEX aggregator. So what a DEX
aggregator?
DEX aggregator. So it's basically a decentralized exchange. So there are multiple decentralized exchanges. Obviously, right now, what has happened is everybody is more focused towards one single decentralized exchange, Uniswap on Ethereum, PancakeSwap on Binance Smart Chain, and every other chain has their own native DEX, which is like the main DEX, where all the tokens get listed on the main DEX. For example, on Polygon, we have QuickSwap, which is their main DEX. Most tokens launch on QuickSwap. So this is one of the concept where we try to combine these dexes together, kind of like what 1inch is doing, which is also a dex aggregator. But what we were able to figure out is combine liquidity pools and try to give a much better price to the end user. By sharing liquidity pools of different dexes and trying to get the best prices when they swap. So at any given point, like if you had to compare between 1inch versus our DEX, the DEX aggregator that we were testing out, you could clearly see that one of this DEX had at least $15 price difference with Ethereum. So that creates an arbitrage opportunity for anyone looking to buy and sell Ethereum. So this was one of the concepts that we worked on. And then we had something called as name services. So what we wanted to do was build an infrastructure. So just like how you have .eth, which is a domain, like you can even create a website or whatever that you want with it. But what basically it does is it removes the contract, your alphanumerical address that you have, your public key that you have, and it gives you a name. So people don't need to, memorize your alphanumerical address. They can just know, like, Clinton D'Souza .eth, and I can send funds to you. So this is what these .eth domains did, and that's the same with other chains also. Matic, Polygon has .matic. Then I don't know if it is integrated with it. But you have FTM Phantom for Phantom Chain. So all of these were looking to create this name services wherein you can send and buy whatever. You can send crypto to these people without having to memorize these. So what we saw with this was there were a lot of layer 2 blockchains that were coming up, and most of these needed an infrastructure for naming services. So what we decided, instead of somebody coming up and building their own naming infrastructure on each of these blockchains, let's just build a common infrastructure and we can make it multi-chain. So anybody can come and use our tech and they can, get the same names on their platform. So this was one of the concept that we tried. And then we had something of how a liquidity locker works. So we tried to work around with the different concepts and create a DAO based on it. And then we also worked on a decentralized storage, which is the same as Dropbox, but in a decentralized way. Uh, this was another concept that we tested in this market. And recently we tested out a product which is more towards trying to sponsor the gas fee on the deck. So a user doesn't need to have the native token. So what the biggest issue that I faced when I got into crypto was I didn't know the concept of gas fee. So
what is a gas fee?
So basically, to make it very simple for you, like let's say you want to create a transaction, you're on the Ethereum blockchain, okay? You want to buy some crypto or you want to send someone something, you need to have Ethereum in your wallet because that acts as the currency. Without that, you're not able to make any kind of transactions on that wallet. Now, what we tried to do here with our concept was to avoid anyone having ETH in their wallet. They can straight away make transactions with any token that they have, and we will just charge a fee from the token that they are using for any kind of transaction. So this is what we've been, working on. One of the very recent projects that we've been working on, and I feel the concept is very good enough for it to, go mainstream in the next bull run.
One of the things is which is pretty exciting. Like it looks pretty weird to me, to be honest. Exciting from outside is the jargons the crypto people use in their daily conversations. I think they have created a different kind of vocabulary, and they use, even the coded language, even they tweet in coded language. Only the people in the crypto community would understand.
Right.
So, could you tell me about? Could you name some of the few jargons or phrases in the crypto community?
Right. So There are many actually. One is diamond hands, obviously, which I mentioned about at the starting of the podcast. Uh, Diamond hands are basically people who do not sell their assets when they are at a loss.
Okay.
They believe that the project and the founder is going to take them to the moon.
Moon.
Moon
To the moon is another phrase.
phrase which is very commonly used, which means that the chart is just going to go parabolic.
Parabolic.
Yeah. So to the moon is a very common term that's used, and we have someone called as paper hands. Paper hands are basically people who just sell, and paper hands are also called as jeets. Okay,
Jeets.
jeets. Yeah. So jeets is a word. It's an Indian word, like for paji.
Paji.
It's become a racial slur right now in crypto, and it's become a slang, and a lot of people use it. In fact, a lot of
Why people use Jeet? When do people use Jeet?
um, it's about people who are selling their assets at a loss, and
Okay.
who are panic sellers, basically panic sellers, and all they want is just a quick return, and a small return, like basically lunch money kind of
Okay.
concept. So that's why it's a term that's used because crypto it's global, and most people kind of relate Jeets with like Indians with this kind of mentality where you want to sell things at a much cheaper price. There is a Reddit thread as to where it actually originated from. In fact, like I don't know how true it is, but they say that it came when Polygon actually dumped a couple of their tokens in 2018 or somewhere around 2019. They dumped their tokens in the market, and it caused a massive red candle. And that is where the term came into existence, because it obviously Polygon is an Indian company, and everyone started calling them these Jeets, and that Jeets went on to be a term in crypto where people even to this day use it for any kind of project, where if it's any investor who sells it early, or sells it at a small profit, or panic sells it, or starts asking questions like when marketing, or these kind of things, when development, when this update, specifically to wait for that exit. So this is where that G term has come into existence. And apart from that, you have terms like when Lambo, so basically WEN Lambo.
When Lambo.
Yeah.
Lambo stands for Lamborghini.
Lamborghini. So basically, it means it's a funny way to ask, like when somebody is bragging about they have been able to make so much returns, or if a founder has recently launched a project, and you're very bullish on that project, and you just want to ask in the chat
When Lambo.
so it's a very fun community. I mean, where
Okay.
this investment journey started from. Obviously, we had to be a little away from that, because it just takes you out from reality. It cuts you off from reality, because reality is obviously different. You can't be talking to people the same way you've been talking in these chat groups, or
Yeah.
how you talk to people in this degen space. And that's quite what is happening. You kind of start having most people kind of start having ego issues, and
Yeah.
it's a lot of personal issues that they have, because they are literally cut from reality.
Yeah. Now let's talk about NFTs. I understand its potential to digitize the ownership. Like it is a smart way to distribute the ownership or authenticate the ownership. But I don't understand why things like NFTs like Bored Ape, very quite artistic projects worth so much. I think I read a project by Bored Ape costed like $3.5 million, and which is now again to slide it down back to $60,000. Still, I don't understand why it costs so much money.
Right.
What do you guys see that I don't?
Right. See, NFTs, right? There were a lot of projects that came in during the bull market. NFTs are mainly driven by three things. One is your NFT needs to have a utility.
Mhm.
Second, your art needs to be amazing. Third is there needs to be someone who is backing it. Like it needs to be someone who is well known, an influencer, someone, so that it gives you some kind of a bragging rights to it.
Okay.
On Amitabh Bachchan's NFTs, it gives you some kind of bragging right. Or let's say it's one of the NFTs that I'm very I recommend a lot of people. Obviously, it's not a financial advice. Is Zo NFTs, and the reason
Zoho
why,
NFT.
yes, Zo World NFTs. Now, the reason why I say it is because it's very utility driven. It's a community. It's a real world community that is being built. Apart from that, there are also communities which are digital communities where you have Telegram groups or Discord groups where you network with people, and then you have utilities wherein owning this NFT gets you access to something. You can use something. You can use certain tools, or you can do so many other things. It can also be something like digital data storage. It can be any of it, like these NFTs. And another thing that I mentioned was uh, NFTs need to have some artwork in it. Like it needs to be something where when you look at that NFT, you know that a certain amount of work has been put to create that art. That is also another way you can value an NFT. Now, why Bored Ape is what it is because it's a community that is being built there. It's not just, see, like you're from Mangalore, like to give you an example, how much does Country Club or Eden Club charge for a membership, a lifetime membership? I think roughly around, I think like 5 years back or 10, roughly around 8 years back, they were charging 1 lakh, or roughly for a family of four, it was charging like 5 lakhs. So when you look at these membership, what is it that these membership give you? They give you that exclusivity. They give you certain rights to go to that club, the parties that you get access to. And Bored Ape is exactly doing that. What they are doing is they are connecting a whole global world into this whole ecosystem. It's not just random people, it's influencers who have, come together. It's people, rappers, musicians, artists, actors, businessmen who have bought it. And it's a whole new community that is being built here. And when you look at these kind of people, they're not people with like net worth of 1 million or 2 million. Most of these people have a net worth of like hundreds of millions. Some go even to $1 billion in net worth. And when you have a network, you have a community of just 10,000 people. There's a limited supply to these NFTs. Some own even 10 NFTs or even a higher number of NFTs. Now, when you have this kind of exclusivity, and when you know that in a community, in a group, you, let's say country club itself, you were to go to a country club and you were to meet somebody who has a net worth of $1 billion, wouldn't the value of that particular membership go high, especially if the membership was limited? It would create some kind of a market value for that NFT, and that's exactly what is happening. It's kind of like what you can call a membership to these things, because even that's the same with Zoe. Basically, you have access to that whole ecosystem, the community that you go there, the parties that happen in these kind of places. You meet people who are at the same mindset that you have, the growth mindset, entrepreneurial mindset, and you kind of network with these people. New ideas come, and which is much worth than anything else. And that is where the price of these NFTs come into picture.
Tell me about stable coins, altcoins, and meme coins. How are they different from each other?
So see, stable coins are basically, they are backed by a dollar.
They're backed by, okay, stable currency.
Exactly.
That's why they're called stable.
They're called as stable coins.
Okay.
And altcoins are low market cap coins, which is alternative to your main, your big cryptocurrencies like Bitcoin, Ethereum. So these currencies are like more like tokens where you invest. It's native to what the project is, or to whatever the concept is, or what the utility is. And then you have something called as meme coins, obviously, which are more culture driven. It's more of a community based, wherein they buy it in the hopes that the value of it is going to increase. It's more community driven, the tokens. And then you have something called as shit coins, which is also which you missed. And
yeah, so
shit coins are basically tokens which are at a very low market cap, which are similar to meme coins, but coins which have no utility at all. People just buy it because it's one of them could do well, so they do not know.
It's just get gambling.
Exactly, it's almost like gambling on it. And these were very common in 2021. Now, not so much, but this is also one of the area where you have these tokens which are not utility, which are kind of like meme coins, but people like to gamble with these.
Okay. Any other coin am I missing?
No.
So can you tell me the use cases of stable coin, meme coin, altcoins, and the shit coins?
Right. Yes. So see, basically stable coins are backed by a dollar. So what you can use these for is to transfer funds to somebody globally, or you could even use that for trading. You could even use it as a store of value. Like if, let's say, anywhere in the global, if some of their investors want to invest into US dollars, buying BUSD or USDC is one of the way they can, hold their
Get access to investing in dollars.
to investment in dollars. And your altcoins are basically these coins, like, for example, Chainlink. Chainlink is an oracle, like Oracle for crypto, you can call it.
Okay.
Basically, it's a database that connects a blockchain to the real world data. Then you have tokens like there are multiple. Brave is the browser that you have. It's just like Google, and it's a more anonymous. And
it's a reward giving browser.
It's a privacy focus where you can choose whether you want to be want to have targeted ads or not. And if you have targeted ads, you get paid for it also because you watch the ad. So it's a whole ecosystem.
So the pay in altcoins.
Yes, they pay in Brave tokens. Brave tokens is basically BAT tokens. BAT is the ticker for it.
Okay.
Users are paid via BAT, they transact via BAT. So these are like altcoins where people speculate that the value of it would increase if the company, if Brave does well in the future, adoption increases, or if they have a very strong revenue.
So is there any use to meme coins?
See, right now meme coins are used as payments. Many people use it for payments. Okay, in the blockchain, it's very common. Like if someone says, can you send me $100? You could even send that $100 in Dogecoin.
Okay.
Very, very common.
Yeah, even Tesla is accepting merchandise in
Dogecoin, and the value of that could increase, it could decrease.
It's all cultural driven, as you said.
Exactly. So this is one of the way where these meme coins have a utility. Apart from that, now meme coins themselves are building blockchains and utilities, like what you have Brave browser or any of it. They're building utilities so that their meme coins have some additional value. Say that they are not just meme coins, like Shibarium, what is a new blockchain, which is a SHIB token, Shiba Inu. What they are looking to do is build a blockchain itself, like Ethereum, and users can build apps on this. And their token is going to be like a gas fee, just like how BNB, Binance token, which is a gas fee for Binance Smart Chain. Similar thing is like meme coins are starting to have utilities these days. It's not just going to be a random meme coin.
Let's talk about the present trends happening in crypto space. What's happening?
So right now, there isn't much happening in the market in terms of tokens. Most of these companies are waiting for the bull market to come in, and there's not much in terms of market stuff that is happening. But builders are still building. There are developers and founders who are still building in this market. New concepts are coming up. New papers are being written on new concepts. So one of that is ZK rollups, what do you call it? ZK rollups. Basically, what it is it bundles a transaction. So Ethereum, like just to give you an example, Ethereum has just become mainstream now. The security and stability is like unbeatable to any other blockchain at this point of time. So what people are doing is building layer twos. Apart from that, what we have something called as rollups. And what these rollups do is they bundle the transactions and then they send it to the Ethereum blockchain for validation. So this is what
it minimizes the calculation.
It uses the gas fee to the user, the transaction fee is lower, the user interface increases, and this rollups can also be made private. Like each company can have their own rollup, which does transactions to the Ethereum and it gets validated there. So it can be for any utilities. It can be even tokenization of real world assets, which itself is a very, very huge topic.
Tokenization of the real world assets.
Exactly. So this is also a very huge topic, and BlackRock and these companies are, these hedge funds are very bullish on tokenization of real world assets, and they expect that the market would be worth $20 trillion in the next decade.
So tell me about in detail what is tokenization of the real world assets.
So just to give you a very basic understanding, what land that you see, okay, let's say you have a land.
Okay, 1 acre.
1 acre of land. So what you can do is tokenize that 1 acre of land. You can list it in a market. There aren't any marketplaces as of yet for these real world assets. But just like we saw for NFT, there were no markets. People would directly trade those NFTs, but then came OpenSea, where you could go and meet these buyers. Then came, it's the same concept as how centralized exchanges are or how Zerodha is. It's the same concept over here, wherein you will have a whole new market for this real world assets. Let's say you have a land in Dubai, maybe like a few cents, maybe in Palm Island or anywhere, any of these islands, you have a land. You could list it on your on this platform, and somebody could buy this land from you and get the rights and ownership to that land via this token. So basically, it's globalizing the whole ecosystem and also fractionalizing it. So you could have multiple owners. Let's say your land costs maybe 1 CR. You could have 100 owners of that particular piece of land who could then sell it to someone else in the market itself. Suppose that you could, trade these assets, the tokenized assets in the market, in the secondary market. You could buy and sell, find buyers anywhere in the globally. You can find buyers, and you could buy and sell it with them. And BlackRock is specifically doing that. They've been buying real estate all around the globe at this point of time.
How do you authenticate the property if you're tokenizing the piece of land? And how would I, as a buyer, would I know that, okay, this is authentic,
right,
if it's not?
See, here I do not know the exact concept as to how they are going to authenticate that, but I can tell you how it's working with carbon credits. So
Okay.
Not everyone can sell carbon credits. You need some kind of a license, you need some kind of a global recognition that you are a legitimate company who is selling these land. And I think BlackRock is specifically in that niche. And I think they are going to be one of the pioneers who are going to be in this tokenized economy of tokenized real world assets. And it's not just land that we are talking about. We are talking about your real world assets. It could be even agriculture. It could be water.
Fresh water.
Yes, it could be even water, where it could be tokenized in this point of time, where water is very scarce, and people could just buy water as an investment, and then they could sell it in the future, sell these tokens, because it's backed by an underlying water asset. So these are a few things which the whole crypto opens up. It opens a whole new door for globalization of these assets that are which are very essential for our living, and this is what crypto is.
What do I make out of this conversation is connecting physical and the digital world is the key in future of crypto,
Right.
and that itself is the challenge the crypto community is facing. If they solve it, I think crypto would be mainstream consumer applications.
Right. So this concept here, the real
Connecting real world and the digital,
or tokenization of real world assets, it's not something like a meme coin. Not everybody can come and tokenize their real world asset. It has to be companies who are recognized to do it. And what we might see here is, if a company has recognized and made an asset tokenized, there's going to be a whole new market where people are going to be speculatively trading these tokenized land assets. And this is where I feel
will determine the price of the land.
And so this is where the price discovery is going to happen in the future.
What you as a crypto investor would advise the upcoming crypto founders or crypto engineers?
It's very difficult for your first company to be that multi-million-dollar company or a billion-dollar company. We see a lot of founders coming up with big ideas, saying this is what they're going to build and this is what they're going to do. See, either you need to have a very good funding, like you need somebody who's going to keep funding you so that you have a very massive burn rate. You can go for the next 5 years till you see that adoption, kind of like how Zomato and all these Flipkart and these companies are. Or you need to meet a market demand. If there is a market need, you need to meet that. So I think where most founders kind of fail is they think that their idea is the next multi-million-dollar or next billion-dollar idea. And they fail to work on those small things, the small concepts, small ideas, which could meet an immediate market need, which can teach them so much more than which could actually help them build the next $1 million company. They miss out these key details, and that is where I feel most founders should understand that they should focus on concepts and ideas and needs which will meet the immediate market need, and work on the bigger concepts on as a side by. And when they receive a bigger funding for these kind of ideas, go ahead with it and try pursuing it. Or if you have identified a current problem and you know that you don't need a funding, you can straight away try solving it and get instant revenue from it. There's an instant cash flow. this is another way, and this problem is only going to become bigger in the future. This is another way I feel founders should kind of accept that your first company need not be a multi-million dollar company right now, right? um, there are very few developers who are actually capable of developing something on blockchain. And when I say, I'm not talking about developers who can just deploy a basic smart contract or any of it, who can actually understand the logic. Like, there are so many complex problems in the world which can be decentralized, and we need developers who are actually capable of solving these real world problems. Like, you would be surprised, like one of the biggest dev aggregator here in India, with, I don't know, more than 10,000, 20, 30,000 or something developers. I was just filtering out through some of their top devs, like based on the grants they've got and all, and based on the funding, the amount of funding they've got. And I was surprised that none of them seemed as competent for the grants or whatever they have been ranked accordingly on that website. So to me, it was a matter of concern, because that also shows there aren't very good competent developers. It's not just a developer; it's a competent developer that matters here, because you can't be building something which is unreliable. You have to build something with enough security and enough stability, and that requires very good developers. So I keep mentioning this term because it is very, very important that we you don't just become a developer, you become one of the best developer. So that's more important, because it's already, the time is already gone. 2018 is when, 2019, 2020 is when anyone who could just deploy a smart contract would, be called a developer, or, he could be a freelancer. But now that's not the case. Now it's gone a little one step higher, and you have to be learning much more than a regular person or regular developer does.